Hi everybody and welcome to the newly named UK Mortgage Market Insights for the weekend in the 27th of September 2023. I hope that I find you all well. So the first thing that I'd like to cover this week is the fact that a lot of the main high street lenders have been reducing their fixed rate mortgages over the course of this last week or so. Now this is mainly driven by swap rates, which we will come on to as usual a little bit later on. But this week we've had numerous emails from the likes of HSBC, Barclays, Halifax, Birmingham Midshires, NatWest, and many others, all announcing that they're reducing their fixed rates. And in some cases, we're now starting to see 5-year fixed rate mortgages below 5%, which is great news. Now, it's important to note that many of these 5-year fixed rates that are below 5% are actually only available for people that are purchasing property, so first-time buyers or people moving home. Unfortunately, at the moment, they don't seem to be available to people remortgaging, which is a little bit disappointing in my opinion. Now, as I said, many of these rate reductions are applying in particular to those people that are purchasing property. In my opinion, this is a lender's attempt at stoking a little bit of interest in the property market to try and boost people purchasing property. But in all honesty, I don't think this goes far enough. Property prices are on the way down, and I really don't think that these interest rates are going to be enough to stoke interest from people looking to buy property when there is a severe risk that property prices are going to drop further. I think in order to stoke some interest in the property market, lenders are going to have to offer rates a lot lower, but yet they're not able to do so because the swap rates won't allow them to do that either. So it's interesting times with the way that lenders are pricing things right now, and it's something that we're going to keep a close eye on. But as I said, this week we have seen numerous emails from mortgage lenders reducing their rates, which is great news. So as we're talking about interest rates, now will be a good time to have a look at the swap rate chart. So for those of you that are actually watching this, you can now see on screen the swap rate chart. So let's just look at the key numbers. So if you look at the current swap rate column, you can see that in most cases, the swap rates are actually below 5%. That's everything but 1 and 2 year swap rates. So this is an indicator as to why we've seen lenders over the last week or so reducing their rates, and in some cases with the 5-year fixed below 5%. However, this week we've seen a little bit of a fluctuation in the swap rates because there's been increased worry about the fact that oil prices are rising and then potentially the release of the inflation data in the course of the next month. Now, the positive inflation data actually made the Bank of England decide to hold rates for the time being. I don't think that's necessarily going to be the case the next time they meet in the beginning of November, and we might see a 0.25% increase in the Bank of England base rate. Now, there was some hope that we might start to see some 2-year fixed rates coming in below 5%, but to be honest, I think this is going to be a long way off for the time being. I honestly can't see this happening. But as far as we're concerned at the moment, the most popular products that we seem to be talking to clients about are 2-year fixed rates and 2-year tracker mortgages that don't offer any redemption penalties. This is because there is the feeling that over the course of the next 5 years, interest rates are going to be potentially lower than where they are now, and people are trying to give themselves that flexibility. But there you go, that's swap rates covered for this week. Now, the next thing that I'd like to cover is the fact that Rishi Sunak has scrapped the proposed energy efficiency targets for households. So for those of you that don't know, and in particular, this is going to be aimed at those people that are landlords, there were some EPC requirements, that's Energy Performance Certificate requirements, due to come into force in 2025. This would have meant that any properties that were newly tenanted needed to have an energy performance rating of C or above, and then that was going to move on further so that it meant that all properties had to have the same rating by 2028. Now, this was obviously a bit of a worry for landlords because in some cases it was going to mean quite considerable expense to start to improve their properties, and it was obviously great news for tenants because that meant that the homes that they were living in were going to be more energy efficient, and potentially that was going to have an impact on their energy bills. But in a recent speech, Rishi Sunak had announced that this was now no longer a requirement and that landlords didn't have to worry about upgrading their properties to these new energy efficient standards. So of course, that's great news for landlords. However, we are finding that some are a little bit upset because some landlords who were ahead of the game had already started to make improvements to their properties. Other landlords had disappointingly decided enough's enough and they'd started to sell their properties because they just didn't want to incur this new expense. So I'd like to get the thoughts of any landlords that might be watching this, to see what you did. What are your thoughts on this? Are you happy that these energy efficiency targets have been scrapped? Are you disappointed because you'd already started to improve your properties? Please do leave some comments below because I'd like to get your thoughts. And if you're a tenant likewise, what are your thoughts on this? Is it now going to cause you a bit of worry because your landlord isn't going to improve the property's energy efficiency, and that might mean that you're going to end up paying higher household bills? Again, if you're a tenant and you're watching this, please do leave your thoughts in the comments below. So whether or not there is a U-turn on this later on, who knows? Is this just something that he's doing because there's an upcoming election? Is he trying to win the votes from landlords? Who knows? But please do leave your thoughts in the comments below because I'd like to hear them. Next up is another article that I have briefly covered in one of my daily videos, but I'd just like to expand a little bit further on it here and get some thoughts from you guys. So a new lender is launching in the UK. They're called Perenna, and they're aiming to change the UK's mortgage market landscape. Now in Europe, there are many long-term fixed-rate mortgages available. So we're talking 25, 30-year fixed-rate mortgages. It's not something that's ever really been popular in the UK because it seems that us Brits like to have some flexibility, and there is a real interest in shorter term fixed rates because it allows people to move and have flexibility with what seems to be an ever fluctuating interest rate landscape in the UK. But Perenna have recently launched. Now they only have products available to those on a waiting list at the moment, which apparently there are over 500 people, before they launch to the rest of the public. They've raised some money, which they're using to lend to these people on the waiting list. And essentially what they're doing is they're offering fixed rates for 25 or 30 years. And one of their main aims is to tackle affordability for first-time buyers. So essentially what you're actually buying into is a long-term fixed rate. However, you are able to get out of this after a shorter period of time. And I believe that's set at something like 5 years. So you're only really tied into the mortgage for a shorter period of time, not the entire term of your mortgage. And for some people, this is obviously a great idea because it gives them absolute certainty of what their payments are going to be longer term. But as I said at the beginning, in the UK, it seems that because the interest rates are fluctuating on a very regular basis, us Brits like that flexibility and like to move sooner rather than later. So I don't know how popular this product is going to be. Apparently they do have, like I said, this long waiting list, and there's been a lot of interest shown in their product. But what are your thoughts? Is a long-term fixed rate mortgage something that you would go with? Or do you just think it's a silly idea and it's just something that's not really going to take hold here in the UK? Love your thoughts, so please do leave them below. And then lastly, this week, I just want to cover off something else that's aimed at those people who are self-employed. So if you're looking to get a mortgage in the next few months, it's vitally important that you now get your tax returns up to date. Now, as we all know, the tax year runs from April to April, so that's the 5th of April, and most people will do their tax returns and get them submitted by the end of January. Now, when it comes to assessing income for self-employed individuals, lenders will look at your SA 302s. Obviously, those are the documents that are produced following your tax return. Now, lenders need these to be within 18 months old, and it's likely that the most recent SA 302 that self-employed people will have on file is for the tax year ending April 2022. So if we now consider that we're coming into October, April 2022 is very soon. It's going to be more than 18 months ago. So therefore, if you're looking to get a mortgage as a self-employed person after the 5th of October, which is only next week, it's really important that you speak to your accountant, you get your tax return submitted, and you get those up-to-date SA 302s for the year ending April 2023. Because without them, mortgage lenders are just not going to look at your mortgage application. So that brings us to the end of this week's newly named UK Mortgage Market Insight. This is now available on YouTube and by podcast. So for those of you that prefer to listen rather than to watch, you now have the ability to listen to these weekly updates. Hope you found it useful. As always, thanks for your interest in the channel. I really appreciate your support. But for now, that leaves me to say, have a great weekend and I'll speak to you next week. Take care.